morning, everyone. What a beautiful day. Heading to the golf course. Gonna be hot. Tax tip number 8. Okay, understanding the difference between wages and dividends. This could not be a more relevant topic. Yesterday I had a client in that pays himself wages, and because of the situation that he's in and the situation that his corporation's in, just by switching him over to dividends and him taking the same amount of money out of his corporation, just by switching him to dividends, we saved him $12,528 a year. That's crazy, right? I mean, that's an extraordinary example of what going from wages to dividends might be, because of the situation that the corporation was in. Okay, corporation had some losses that they need to use from prior years, and they weren't recouping those things because all the profits in this company he was taking out as a wage, so that his corporation wouldn't pay any tax. Anyways, it's important to know what the best remuneration structure is for you. So and this only applies to people that own corporations. So if you have a sole proprietor, skip this tip. There are some drawbacks to paying yourself a dividend rather than paying yourself a wage. The drawbacks are you save money on CPP because you don't get to contribute to your CPP, but that CPP dollars don't contribute to your CPP earnings when they calculate what your retirement amount is going to be from CPP when you get older and retire. But if you were to take the money that you would otherwise be putting into CPP and put it into your own investments, say a tax-free savings account or some RSPs, you're actually going to be better off in the long run, because when you die, your family's not going to get the $2,500 thanks for coming out check from the government. They're going to get everything that's in there. All the money that's in there, it's yours, right? But with CPP, you contribute, and if you live, you benefit. If you die, you don't, and neither does your family. So those are definitely things to consider. You also get 15% of your working career as a break when it comes to the CPP calculation. Okay, this is usually for those years that you're sick, you're going to school, you're having children, stuff like that. So I think it's 6.8 years or something like that. That actually doesn't count towards your CPP calculation. So you can do this for a few years and actually not have it harm your CPP calculation at all. And what I do with my clients is when I switch them to dividends, or if I switch them to dividends, I keep tabs on them to make sure that they are in fact investing their money into some sort of investment vehicle, whether it's tax-free savings or RSP. And if they're not, then I strongly try to convince them to move back to wages, because they obviously can't handle or are not capable of saving for their own retirement. And then in that case, paying a wage is in fact the better thing to do. There's many different scenarios. So if you own a corporation and you are looking to save some money in the short term and make some money in the long term, talk to your accountant. Make sure that paying yourself a wage or paying yourself a dividend is in fact the best option for you, because a lot of times people do it wrong, and it's it could save thousands. Like in this case, $12,528. I couldn't believe it when I did the calculation how much the difference actually was per year. So and that was based on 2020 numbers. So in 2021 it'd actually be a little bit higher. Crazy. They were obviously very, very happy and agreeable to save 12 grand. So that was really nice. So I hope that helps. Take care of yourself, take care of your family, take care of your friends, and be well.